hosting today and introducing the moderator who would be taking over. It's truly an honor to be here today to welcome every single person. Today is the first of several series, and coincidentally, it's actually the launch of International Trade Week starting today. This panel is hosted by Filii Magna, a proud company that has been in Nigeria for the last 4 years. In the last 1 year, even in spite of the pandemic, they have proudly spread their wings into other countries, the UK and now North America. I'm actually speaking from the North American office, coincidentally. So it's truly an honor to be here today, where we serve a very niche sector, where we handle travel documentations for expatriates and international individuals wherever they are in the world. All of that information will be shared at the end of the session. Today is truly an honor to open this series. Today will be the first. There will be another one on Friday and then another one in October as well. Like I said, it's not about me today. It's about the speakers, and I'm really excited. I'm looking forward to hearing from them. They're all quite knowledgeable in their different areas and fields. And without saying anything else, I'm going to hand over to Abiola Adediran. Abiola Adediran is a finance specialist in her own field. She serves. I'm not going to do much. I'm actually being asked to read her bio at the end of this so that she can get into her panel. Thank you very much, Abiola. Over to you.
Thank you so much, Dr. for having me, and I feel so privileged and honored to be moderating this session today. I can see we have a lineup of speakers or panelists who are going to be doing justice to the topic of discussion today, and these are people, who are very knowledgeable in their own spheres, and they've garnered experience, and they're going to be talking to us from the wealth of knowledge, and of course from their practice in the investment management industry or the finance industry, as it were. And of course, before I start to talk about my panelists or introduce them, I can tell you that we have a very robust, view around the diversity of the panel that is going to be doing justice to this. We have representation from private sector and also from public sector. So we're going to be bringing a more or less balanced view as we talk about the theme or the topic for this particular panel, which is essentially evaluating the value of your investment and planning your future. So the first panelist I'm going to be introducing is Oluwatosin Olaseinde. She is a CEO and founder of Money Africa. She is a professional accountant with over 10 years of experience spanning across accounting, audit, financial management, and tax. To enhance financial literacy and investment, leveraging on technology, right? So I guess our focus is the millennials who have come to embrace technology, but also need to understand, what it takes to do investment and make, profitable returns from your investment. So she does a lot of that. She's a Washington Mandela Fellow. She's a finalist of the Future Awards in 2019. She was selected as one of the top 100 women by the Leading Ladies Africa. She was one of the top 8 traders by CNBC Africa in 2012. And of course, she's spoken on various platforms. So please make welcome Oluwatosin Olaseinde. I want to see a virtual clap, okay? Please give my speaker a warm welcome. Thank you very much. The next panelist I'm going to be introducing is Ekpeyong Oduwole. She is the country head private banking Sterling Bank. She's a very seasoned wealth management professional with a very extensive knowledge of local and international wealth management as well as advisory services. She's currently the country head of private banking at Sterling, and she's had the privilege of managing the portfolio for ultra high net worth individuals and high net worth individuals. She's very passionate about equipping people, women with the necessary skills that she has. She's an associate of Wimbis, and she's a very effective speaker who has, spoken on various panels and various platforms. Please make welcome Ekpeyong Oduwole. Please give her a round of applause. I want to see your virtual clap, please. You can put your virtual clap in the chat box. We will see it. Thank you so much. You're welcome, Ekpeyong. And last but not the least is Asuquo Ekpeyong, who, like I said, is the person that is going to be bringing a more balanced view to the conversation we're going to be having today. He comes from the public sector, and he is the Commissioner for Finance in Cross River State. Had opportunity to school abroad, work abroad, and he's brought that knowledge, especially as it relates to financial management and wealth management, into the public sector. He's worked on various platforms. He served as the managing director of a licensed bureau de change. He was the director of Pearland Energy. He's also a member of directors of Ekpeyong Microfinance Bank between 2013 and 2015. He served on several critical board committees. And right now, he's been on he was appointed as a commissioner for finance by the Cross River governor since 2015, and that is a position that he holds. Asuquo Ekpeyong. Thank you so much for joining us in this panel. So as I said, what we're going to be talking about today is essentially around investment. How do you evaluate the value of your investment? And of course, also plan for the future. Now, if there's anything that we can all relate to this year in 2020, is the fact that something has happened. The pandemic happened and it has altered a lot of things. It has impacted the economic activities of all the nations of the world, essentially. So Nigeria is not exempted. And what this means also is that it has impacted, whether it is individual portfolio or corporate portfolio of investment, right? So I imagine someone like Ekpe, for instance, is probably having to sit down with our clients, to sort of reevaluate their portfolio and see whether they need to do any form of restructuring or move investment from one particular type of assets to another, just to be able to enhance, the performance of that portfolio at the end of the day. But I'm going to allow you to do justice to this conversation, and I'm going to start with you, Ekpe. How has the global pandemic or the shutdown, that lasted for a couple of months, how has it impacted the value of investment? Of course, there was a shutdown of economic activities. How, in your view, do you think this has also impacted the investment management industry?
Okay, so that's a very interesting topic. And I want to look at it from two perspectives. So there is the portfolio in itself, and there are the people that are being advised in the investment management industry. So what we first saw was fear. Biggest problem we had in COVID was fear. So in the midst of the pandemic, there were a lot of ups and downs. And like I tell people, anywhere there's chaos, there are always opportunities. But when people are afraid, anywhere there's chaos, they don't see the opportunities. What they see is all the horrible things that are happening. So for example, at the beginning of the pandemic, a lot of very smart people went into gold, and gold peaked somewhere in that season because, as everybody knows, gold is the go-to commodity when everybody gets worried. So the people, and with all investments, it's not really about the investment as much as it is about when you go in and when you come out. Like all things in life, if you want to buy low means buy when it's cheap and sell when it's more expensive, right? Or when it has a higher value, let me use that word. So the person that bought Apple eons ago when it was God knows what price at the beginning, and is holding those Apple shares or holding Amazon shares now, but when it was cheaper, and is holding a more valuable asset as at now, right? And in every chaos, like all things in chaos, the market is oscillating. So there were also periods when things went down and they went up. Like I use gold as an example. I'll also give you another example. A lot of people were dumping, for example, I'll use Nigeria. So the Nigeria Eurobond at the beginning of the pandemic, around April, kind of hit a bit of a slump. So a lot of external investors were exiting the country and they were offloading their Eurobonds. So I would make it very simple. Let's imagine that a Eurobond is worth, I'm using a story so that everybody can understand, 1,000 naira. And because everybody wants to sell, like all things in the market, the price goes down to 700. Now, some people bought that Eurobond at 400 naira. And by the time the pandemic started to ease out and everybody saw some sort of stability and the price started to go back up again, right? What happened was people have sold at different stages. For those that were lucky and even bought the very short tenors, when I mean short tenors, things that will mature in 2021. And when I'm talking about Eurobonds now, let me even break it down further. If it's a federal Eurobond, it's simply the federal government of Nigeria telling you, borrow me money in dollars and I will pay you back in dollars. I want to use that money for long-term projects. That's why it's a bond, right? So they took this money. Some of those bonds are maturing in 2021, bought it at a deep discount. But you heard what I said, 100 naira, I'm just throwing, and 400 naira. And are just going to hold that thing till they get back their 1,000 naira. That means they made a full 600 naira, for example, on that singular transaction. In the midst of the pandemic, while some people were busy.
We're dumping.
Were busy dumping, yeah. And some people were scared and some people were worried. So my go-to to customers, not to take too much time, is fear is a paralyzing force in any aspect of your life. So even when it comes to investments, you need to have a good advisor and you need to sit down, and in the midst of every chaos, there are always opportunities. So there were opportunities and actually a lot of people missed it. I hope we have some people that took advantage here. Yeah.
Thank you so much, Ekpeyong, for opening up this in a very, very interesting and engaging way. I'm going to be going to Tosin, and I want to hear your views as well, because I see that you teach a lot of millennials, especially people who are starting their investment journey pretty much, like very beginner stage, people that are just trying to, come up the ladder. Maybe a lot of people who have invested, maybe they even invested for the first time, and then the pandemic started, and then things sort of went sour. And what has been the experience? What has been your interaction with the people that sort of follow you, listen to your advice and all? How do you think that the pandemic has, in a nutshell, right, impacted the investing public, especially the people that you have access to, and how do you think they are reacting to what is going on in the industry? Tosin, this is for you. Oh, okay, I think Tosin is not here.
We must have lost her somewhere.
Oh, she actually is. Okay, she's here actually. Okay. But she's not been upgraded to the panelist. All right, she's been added now. Fantastic. Okay, Tosin. Happy to have you.
All right.
Can you jump on the question?
For having me. I'm very excited to be here. So now this is what we've seen. I think we're about reaching about 1 million people that have passed on because of the pandemic. I empathize with everyone. However, if you're looking at people's personal finance, it's been like a blessing in disguise, right? It's a reminder of what retirement is going to look like. It's a reminder of, if I lose my job, what's going to happen. So people are seeing people lose their job. People are seeing people actually like, what if this happens? So it's not like an imagination. They saw it coming to life. There's lockdown, everybody's forced to stay indoors, you have to rely on your stock, right? For those that actually had a small stock, they're like, my goodness, I have to start investing. So people were suspending expensive purchases, and it starts dawning on them, do I really need a 4-bedroom house? Could I perhaps be staying in a 3 house? And for younger people that are, let's say that they've been working for 3 to 4 years, living in an apartment all by themselves, they start asking a question, do I really have to have all the space to myself alone? How can I leverage on the sharing environment, right? So it's been a lot of thinking. And the beautiful thing here is that you don't have to paint a picture anymore. You can just literally say, you know what, it happened, you know, and this could be what it could look like. So we always say that we can't have a money conversation without us talking about mindset. Mindset is very, very critical, and we have to do all that work to keep painting and imagining it. And then right here is just an example. Number two, we're seeing people start changing habits. Right now, based on research, we're seeing that total investments grew by almost 2 trillion naira over this COVID period. Data from CBN. So you can see that did they now all of a sudden have that 2 trillion naira overnight? People are changing their habits, right? They're liquidating assets and they're moving things, right? So it's a reminder of, you know what can we do? How can we maximize? What can we cut down on expenses? How can we make a decision? Now, from a business point of view, we run a financial literacy platform. I think we saw the best sales ever during that period because now all of a sudden the same people used to beg and cajole and couch to learn about their money are now running to you because they see like, oh my goodness, what's happened? There's a chaos here. And like Okwe rightly said, talking about the gold, what is safety, how should I invest during COVID? I mean, these are some of their frequently asked questions. And also for mothers. Now, I'm hearing a lot of questions that is now different. How do I plan for my children? If I lose my job, what's going to happen? They're now concerned about the security of their children and about the future. So it's quite an interesting journey, just basically looking at people's consumer behavior change over time, and it's quite interesting to watch.
Fantastic. So fantastic. I mean, whether we look at it from a personal angle or from the corporate angle, you see that even organizations are also changing habits. More or less, I mean, if I don't want to call it habits, I would rather say they're changing their investment philosophy, right? You know, and they're waking up to the demand of what's going on, you know, in our world right now. And you really have to be moving with it because the world is so dynamic. And with what has happened, the only way to survive is to ensure that you are, you know, as flexible as possible, and you make sure that, you know, you're pivoting yourself in a way that makes sure that your investment objectives are still achieved as much as possible. So I'm going to go very quickly to Honorable Asuquo, and I want you to give me a public sector perspective of how you think that the pandemic or the global shutdown has impacted the investment management space. I mean, we can speak from the personal point of view, we can speak from the corporate point of view, but how do you think the public sector is responding to the impact of the global shutdown on the economy and, of course, on the investment management industry?
Hello, thank you very much. I think, to be honest, the first speaker kind of touched on this. When the lockdown, or let's say when the pandemic became fully global, the first reaction, of course, was for people to be a bit bearish. They were a bit conservative and a bit cautious in their trading. And so there was a lot of fire sales. People were trying to just liquidate as much as possible. People thought it was like an Armageddon. And people tend to have to want to hold cash, real cash during this period, or near cash assets. And so people started selling off their investments. Obviously, the markets dipped a little bit. But as time went on, people started realizing that, you know what, this isn't the end of the world. We can take up a more bearish stance in certain areas, especially in technology. Obviously, we're having a virtual conference now. A year ago, we probably would have been at a physical venue having this conference. And even if we did a virtual conference, we would have had a far less number of attendees. So this is the new normal. So people realize, you know what, let's look at the technology sector. Let's leverage on what's happening and invest there. And there was obviously a lot of impressive performances by the tech companies. Just recently, I think about 3 weeks ago, for the first time, a man has crossed the $200 billion threshold in terms of valuation, and that's Jeff Bezos of Amazon. So the tech companies have rallied a lot. It's a good space to put money and do a lot of investment. And of course, don't forget the medical sector. The companies that are currently working on vaccines have seen a very huge rise in terms of the valuation of their stock. So like the first speaker said, opportunities are created in the midst of chaos. Whenever there's a crisis, it's actually one of the best times to invest. The world, the people, if you look at the history of companies that are born during recessions or during global crises, actually tend to come out to dominate the world for a decade or so after. So my point is, don't follow the crowd. When there's chaos, when there's a crisis, keep a cool head, look sector to invest in, try and hedge. If you're in the oil sector and everything you had was in energy, then you would have taken a huge beating. But if you're wise enough to have hedged in maybe tech and in the medical sectors, then you would have been all right. But if you were even more, let's say, proactive at, let's say, towards the turn of the last year, December, when the pandemic was merely just an outbreak in Wuhan, and you could have seen the writing on the wall, and you started moving your positions from energy to tech and into medical sector, then you would have made a huge killing. So it's always important to try and read the market and know where the market is going to go. That's where the key players make their money.
Fantastic, fantastic. That's so fabulous, right? I mean, if there's anything that I take out of what we've all said, you know, the pandemic happened, but again, what has happened is that there is redistribution of wealth, essentially, depending on, you know, what you've invested in or what opportunities you were willing to take or what risk you were willing to take at every point in time. So essentially, it is really about being knowledgeable about these opportunities and, of course, the right mindset, which is not fueled by fear. Because again, the reason a lot of people hold back or they try to dump down their investments is because they are really not knowledgeable. Maybe they are just afraid, you know, trying to, in the end, you know, they end up making a huge loss, where if they were, you know, a bit, should I say, a bit more risk averse, they probably would have been able to hold up a bit more and still cash out and do very well with their investments. So as we think about the Nigeria of
I'm sorry to interrupt, very sorry, but just to correct something you said. You said redistribution of wealth. Redistribution of wealth is actually a good thing. Actually know what happened during this pandemic. Rather, the median households, the low-income households actually lost a lot of wealth, and the wealth ended up in the hands of a fewer number of people. So there is
it didn't quite go round.
No, not at all. People lost their jobs, people lost their investments, like I said. People, there was fire sales, people were trying to liquidate what they had. And you can imagine whenever there's excess supply in the market, the price drops. So people are taking losses on their investment by just trying to liquidate their positions to be more, to have more cash or near cash assets. And then, so they were taking losses and ended up, you know, wealth actually has moved and concentrated a lot more
into the hands of people who were willing to hold on. Yeah,
but a lot more fewer people.
Fewer people. Absolutely. Absolutely. That was so fantastic. I mean, people felt the need to hold more cash, you know, than any other time before the pandemic. So yes, I get that point. Thank you so much. So Tosin, I'm going to come back to you very quickly. You know, right now in the present Nigeria that we have, right, given the, you know, where we are in the economy, a lot of things have happened, you know, oil prices going up and down, the exchange rates, Naira being devalued, all of, so many things, a combination of things that are happening in the macroeconomic environment that of course has implication for our investment portfolio and the value of the investments that we hold. What would you consider the factors that we need to, you know, consider when we're making investments, especially in the economy of today?
Okay, that's a very fantastic question. For a lot of, I'm speaking a lot now to retail investors. I think this is a fantastic time to start thinking about your portfolio. So we're doing a bit of a research and we're looking at what the Naira to the dollar was in 1990 compared to what it is in 2020. That's exactly 3 decades after. What 7 Naira 90 kobo in 1990, and we're currently sitting between 380 thereabout, depending on who is talking about what the exchange rate is, and it has depreciated by an average of 13.69% on an annual basis. So just by minding your business, your money is actually losing its value. So you're fighting like a couple of battles. You're fighting the currency risk depreciation. You're fighting inflation rates. You could also not even be earning a real growth on your own income, right? So there's so many things to fight. So now what are we saying to people? Number one, have a diversified portfolio. The part of your portfolio should be listed in foreign currency. So a lot of people will say, oh, but I'm a retail investor. I do not have a lot of money. There are lots of platforms that enable you to actually start from an entry level, and you do not actually have to have like $1 million or even $10,000 to get started. So that's very, very important. Everybody should keep an eye out on their portfolio. Then another thing we're also looking at is things like my risk, right? My risk profile. What kind of risk am I actually taking? Like Ekpeyong said, you know, when we started talking about how a couple of people invested in gold because it's a bearish market, you know, whenever all else fails, it's something people fall back to in terms of security. So understanding all those different elements there. So what is a treasury bill? What is a money market fund? You know, what are the shares? You know, what does the Nigerian stock market look like? The cyclical movement, does it really make sense for me to stay in it for that long while? Should I rather invest in something that can give me a cash flow like your high dividend stocks, right? It's a whole lot of things, but it's also actually very easy. We need to let people know that this thing is easy. It's not rocket science, you know, just following basic, simple steps. First thing first, I need to have a budget. I need to have some savings. Then the next thing, how can I diversify my portfolio? You know, just step by step. And if we're being honest for everybody on this platform, the investor you were 10 years ago is different from the investor you are today. So it changes over time. It's like a muscle. We keep strengthening it. But people are they want to be toned like from day one. So the fear of not just being able to be comfortable with letting off the, you know, and taking through the process, they just hold back and they never take that journey. So in summary, to answer your question is number one, mindset is very, very critical. Number two, play a long-term play. Number three, have a component that is exposed to the global market, right? Just to defend your portfolio. And number four, we're thinking about how can I grow my income? So in as much as we always talk about invest, 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 a person that has 100,000 naira per month and another person that is earning 500,000 naira per month, if they use the strategy, who's going to win? Mr. 500 or Mrs. 500 will win. So we're also thinking about how to grow that.
Absolutely. Income. Thank you so much. That was a fab one. I wanted to also chip in on that. And I want you to approach the portfolio perspective, right? What are the things that you would advise somebody who is coming to you today for investment advice in terms of what they want to do?
Conversations.
I know, right?
Are you a saver? Are you an investor? Why do we do that? Because the more you know yourself, the more you can handle yourself. So if you are a spender, the way we handle a spender's budgeting is different to the way we handle a saver's budgeting, and it's different to the way we handle an investor-minded person's budgeting. There are three different things entirely, right? Because you need to speak to, I'll give you an example quickly. What happens to you when you have a spender is that you guys create a budget, right? It's looking beautiful. And then let me use, because there are women on this call, so let me use that. And then a brand new Chanel bag comes out. And because the money is not your money, it's the person's money. The next thing you're seeing some withdrawals and you're saying, what's going on? I say, oh yeah, I just want to buy this $10,000 bag. And you're thinking, but that was not the plan. And so the way we handle a spender, which is somebody who derives pleasure from acquiring some sort of assets, as in to a certain extent, is different to a saver who is, and there are two different, that's why I said I differentiated between a saver and investor. Now a saver is a hoarder, which means I have a savings account and I just put the money.
Be seeing the money.
Let's just be looking at each other. I mean, I don't want to touch it. Yeah. But that money is making, because it's making 3%. Do you understand? So yes, you are putting money aside.
In fact, also losing value ultimately, given all the things that are working against.
But an investor is somebody who is actively managing their money. Those are usually the easiest to handle, actually. Right? Those are the ones that you sit down with and say, okay, what are your long-term goals? But one is not, every human being is a mix of all three to a certain extent. It's just that some play more than the other. So we establish that first. Then we establish what your risk level is. Because as much as we talk about different things, we're talking from a portfolio perspective. Because I'll give you an example. Venture capitalism is real in Nigeria. What do I mean by venture capitalism? Igbo boys do it all the time. Uncle, we're starting a new business. The entry level is 5 million naira. Uncle will give you 4.5 million and tell you that in 3 years' time, they're going to give me back 4.5 million plus 15% return flat. That's a venture capitalism. That's venture capitalism. It's a whole business, right? And a lot of Nigerians do it. They do it with startups. And in fact, if I were to digress just for a minute, speak to anybody here that has a startup business, the problem, and I talk to a lot of startup businesses, right? And they want to scale up. And the problem is, and I tell them, why don't you go VC, which means find somebody to invest in your business. You have a good business idea, go and do Dragon's Den. find somebody to invest. Find somebody to invest in your business. But guess what? They don't have a balance sheet. They don't have an income statement. They don't know what their total operating expenses. Therefore, they don't know the amount of sales they need to do. Don't know the average cost of their goods sold, because we are in a entrepreneurial environment. Nigeria is predominantly SME skewed, right? Where people run small businesses everywhere. And every single time I sit with people, and I'm saying this because maybe there's somebody on this call that just needs to hear this. And I ask them, you sell clothes. What's the average cost of all your clothes? I don't know. Okay, so how many clothes do you need to sell per month to cover your expenses? I don't know. So how do you know if you are making profits? I just take the money that I need from, do you get all the money that I get? So you're literally running a loss, eating into your capital, right? And then 5 years down the line or 3 years down the line, you're shutting down the business. And the only reason you're shutting down the business is because, guess what? You didn't know how much you needed to sell. So guess what? That thing that they don't like about bankers that we run with the sales budget. Everybody that has a business has a sales budget. Every single person. So whether you are running a manufacturing industry or you are running you're selling in Tejo market, you're selling clothes, everybody has a sales budget, because if you are going to cover your operating expense, you must have a minimum amount that you must sell per month for you to go. But that's an aside. Going back to the portfolio, we look at your risk level. Different people have different risk levels, and you don't want people not night because they did sell. So we have systems by which you calculate how much risk you are willing to take. If you like, but with risk comes return. So don't come and tell me 50% return. And there's nothing like that anyway. But you want 25% return, and you want to only be putting money in savings account. Savings account is 3%. Do you understand? The higher the risk, the higher the return. So we find your risk. And then after we've identified your risk, we sit down, and this is why people need to sit down with investors and start to explain our products and the assets to you. Please do not invest in what you do not understand. If they have to explain it to you 20 times, if you have to take it to your cousin, your brother, your sister, until you understand it, do not put your money in it. Because if you don't understand it, then when the market moves, you will not know what's going on. You will not know its implication on your portfolio. And therefore, the portfolio would have died, and you still wouldn't know anything was going on. Until one day you walk into the bank 6 months after and say, can I have my statement? And then you start shouting, they've cheated me, they've cheated me. They did not cheat you. You just did not understand what you were investing in. So I've broken it into 3 very simple steps. Like Tosin said, very simple, right? Know your money behavior so that you know how to help yourself save. Know the level of risk that you are comfortable with. We had our aunties of the days of old, and we didn't do too badly. All our big mummies that used to, if I'm talking to Africans or Nigerians or people that are, even Nigerians that bought jewelry, all their money was in gold, millions and millions of dollars. Let me not even say naira. They bought jewelry and they kept it. And anytime they needed money to invest, what did they do? They would find somebody and convert their asset, which is gold, and use it. They were comfortable with that level of risk, right? So know your risk and then understand the assets that you are investing in before you invest in it. Of course, things like tenor, Tosin had already spoken to, whether you were going long-term. In fact, you should have 3 levels of goals. You should have short-term goals. You should have medium-term. You should have long-term. If you are grown and you're thinking about retirement, there are some key things Nigerians spend money on. I don't want to take too much time. 1, your children are going to, we believe in education in this country. Factor that in. Are they schooling here? Are they schooling abroad? Right? Number 2, your children are going to get married. That's another major spend, whether you like it or not, whether you don't. Nigerians like a good wedding. Even if it's a small wedding, it's cultural, it's behavioral. They dream about it. They imagine it. I say this is from a lot of conversations that I've had. So you know you're going to spend on school fees, you know you're going to spend on your house, the house you're going to live in, you know you're going to spend on your children's wedding, and you know you're going to retire at 55 or 60, and you're going to live at least, by the grace of God, 20 more years after.
So in a nutshell, just
and
make sure you
know
plan, have the future
exactly.
in view and plan for it.
No, but Abiola, in that planning, those key things I just mentioned,
Yeah. And have a budget in view for those. And ask yourself, how are you going to finance the budget, essentially?
The wedding is 10 million. How are you going to pay for it?
Are you going to put some money in some certain equities that you're going to put towards that, so that hopefully you realize the investment, you know, for that purpose?
Exactly. And you have 4 children. That's 40 million.
Interesting. Thank you so much, Ekpeyong. You've really done justice to that. Thank you so much. You, Honorable, you had already touched on the issue of people being able to foresee what is going to happen, and also just being able to take advantage of opportunities very quickly, either to restructure your portfolio, advantage of investment in other sectors that are likely going to do better, especially in the current economy. What are the things that you think people should do as a attempt to diversify their investment? So let's say, for instance, I've been heavily invested in financial services, or should I say consumer markets, right? Fast-moving consumer goods, right? But I see that, businesses in the technology space are definitely going to do better. There's a lot of focus on technology, on the use of technology to facilitate just about anything, whether it is business or even our social life, right? So in terms of being able to diversify my investment portfolio, because again, my focus is I want to maximize my true worth, the worth of my business, the worth of my investment rather, right? So what do you think I need to do as a Nigerian today, thinking, how I move from where I am today to sort of diversify and take advantage of opportunities in other sectors? Honorable, are you here with us?
Yes, I am. Sorry, I apologize. I'm actually on the road. I'm not at home at the moment. So I'm actually in a hotel. I'm using a public Wi-Fi, so it's a bit sketchy. And you were kind of cutting off when you were speaking. But I think...
Okay, do you want me to go over it?
I kind of gathered the gist. One should invest if they're trying to generate as much return from their investments. Something along those lines.
So my focus is basically on diversification. So looking at the current economy in India, for instance, we've seen certain sectors doing better than others just by reason of, where we have found ourselves. So portfolio, as it were. So I was asking that what are the things that, an average investor listening to us right now, what do you think they can do as they seek to move from maybe an area where they are most invested right now to an area where there are lots of opportunities to maximize their returns? Yeah.
Okay, thank you very much. The first thing I have to say is, by definition, an investment, the standard definition of an investment is an asset that is acquired for, for the purpose of generating income or for appreciation. That said, the first thing they teach you in investments is that information is the basis for any decision. So like the last speaker said, the first thing you ought to do is to acquire as much information, as much data as possible. That is the only way you can make a sound investment decision. Obviously, there are 2 ways to do investments. There's DIY, doing it yourself. The internet is a very powerful tool, going out there, researching and getting as much information, trying to find out the sectors that are going to be stable and are going to generate as much income as possible over the timeline of your investment. The second approach is the more traditional approach, which is to get yourself an investment advisor. And there are many of them out there in Lagos, in Abuja, around Nigeria, who can handhold you through the process. what's important is to understand what is it you are investing for. Are you investing to have a nest egg at a retirement? Are you investing to buy a house? Are you investing to buy a car, to pay your children's school fees? What is the purpose of your investment? Are you trying to set up a trust fund for your children? Well, once you can answer that question, then you can now, my advice is always to have, as much as possible, professional advice when investing, especially if you are going to be investing huge. But beyond that, the world, like I told you, it keeps changing every day. There's a lot of technology at the disposal of everyone to be able to do investments by themselves, DIY. There's a fantastic app out there. It's called Bamboo. I don't know if you've heard of it. It's used for trading. I mean, you just set up the app, you link it to your account, and what they do, they provide a lot of, almost like 3 times a week, they provide a lot of information as to the movement of stocks. It's really broken down, like it's broken down to layman language. They send you emails. They have information sharing, WhatsApp groups, Telegram groups, and you find out how stocks are performing, which companies extremely easy to use. I can't stress that enough. And you'll find yourself in a couple of hours doing your own trades, buying your own shares, and it's all legit. You can check. I'm not doing a promotion for them, by the way. I'm just giving you an example. I literally just did some research. I found the app and started using it. That's something, I'm not anyway invested in the company itself, but I use it. And there are several apps like that that can be used. I'm talking about the do-it-yourself option in case, for someone who has a small principal, let's say 100,000 naira, and wants to start off and see how the journey goes. But like I said, if you're doing it big, doing it for a big goal, like maybe to acquire a house or for a retirement nest egg, then my advice is to reach out to one of the various investment houses, and they will handhold you the entire process. The important thing about investing is always to hedge. There are various risks. When the whole process of investment is a trade-off. It's a trade-off between the risk and the return. So what is your appetite like? How do you hedge? These are questions you need to look out for, and you need to have answers for. Most importantly, you need to be able to look out for the very important risks, such as inflation risk, foreign exchange fluctuations. I'll give you an example, and this is big sector side. We have an investor in Cross River State who's coming in to do an infrastructure project. But between the time we started this discussion we started this engagement on the investment, which was about a year and a half ago, and today, the Naira has gone as far as 480, 490 from 60 when we started the conversation. And there's a lot of instability and a lot of low confidence, investors low confidence in Nigerian currency. So what have we decided to do? We decided on a very unique approach. Cross River State is known for its agriculture. Most people know it for tourism, but we have one of the biggest land base in Nigeria. We have about 21,000 square kilometers of land, very arable. We have different temperatures, and we can grow a lot of crops. One of our major commodities is cocoa. Now, cocoa is a fairly stable commodity because you buy, you export it, you gain foreign exchange, and its price is quite stable. So how does this man who's putting in so much investment in FDI into Cross River State retain some level of the value when he's remitting some of his profits? And the way we've been able to structure it is to have him engage with some of the plantations and have long-term structured buy agreements for the proceeds, so he can buy the cocoa items, export them, and he's sure of retaining the value in terms of dollar, in terms of when he's trying to get his profits out. So there are various methods of trying to hedge against risk. It's important to speak to people about it. Foreign exchange is one of the major factors, because you can imagine investing at 360 naira, and then now the dollar is at I mean, today I think it's about 440, but we did get to about 480 last month. So these are things that need to be looked at. And once again, I can't stress enough, if you're doing a huge time investments, if you're doing it for big goals, try and have the professionals work with you. If you're doing it at a DIY level, there are a lot of tools out there to assist you. And information, once again, is the basis for any decision. So if you want to go out there, you want to diversify, you want to invest, you're new, you're old, you're professional, everyone requires one thing, information. The last speaker spoke a lot, and she said, always invest in what you know. And that's the truth. Because if you invest in what you don't know, you don't even know when the markets are turning. But if you understand what you're investing in, you can even see, for instance, you invest in a commodity in a country, right? And if you don't understand how that, for instance, that crop works, let's talk about crop. You see that there's going to be a drought in that region. If you don't understand the process of that crop cultivation, you don't understand the essence of water in that region to that crop, then you see a drought, you ignore it. But a drought in there may mean that there's going to be a very low crop yield, and that's going to affect the investments very adversely. So those are things that you need to keep in mind.
Fantastic. Thank you so much. Right. I'm going to be going to you, Tosi. One of the things that we've seen in recent times is the fact that DFIs the value that the used to create. So, I mean, if you look at it also for in Nigeria, maybe if you have, for instance, a lot of your expenses in foreign currencies and you want to invest so that you can meet those expenses in the future, what steps would you, advise somebody to take as we start to explore perhaps the global markets to be able to maybe invest in the currencies that you also have your expenses? So let's say I'm investing for retirement. And let's imagine that, I have a lot of my expenses in the UK where I'm sending my kids to school. I'm going to be funding their school fees. I probably may be thinking of relocating to the UK and so have to maybe get a mortgage or whatever. But let's just imagine that a lot of my expenses are in pounds or maybe in dollars, right? And I want to start investing today in a way that makes sense so that I invest in the same currency as my expenses. How do you think I should navigate getting into the global markets to, get into some other investments that are denominated in currencies that will not make me lose value by the time I'm doing these conversions? Because obviously, the devaluation of Naira is here to stay, as we've come to see it, really.
Okay, great. That's a very good question, Abiola. Thank you so much for asking. So we're talking about FDI and people having problems, bringing money into the market. I mean, we saw, according to UNCTDA, they did a research, and then about 48% drop was what happened in terms of our FDI flow. So there's a difference between FDI flow and FDI stock. Of course, you know that, but I'm just talking to our viewers. And then basically it has dropped. So it just goes up things like, what is happening in the market? What is the chance of them being able to get out their money? So you don't want a situation where as you're coming at 330 and then you struggle and you're getting out at 450. You don't want that depreciation to catch you or trap you in that market. Now, bringing it back home to our retail investors. So, for instance, I have in the UK, or I have expenses in the US, or I have a mortgage. How do I match that? The truth is this, right? What would make perfect sense would be a situation if you're earning in that currency. But if you are not earning in that currency, you have to be able to create that, mimic it for yourself. So, for instance, one of the ways to be able to do that could be investing in global shares. So if you're investing in certain shares that pays you dividend, the dividend flow can actually match that expense. Another option also is a Euro bond. So the Euro bond in the market is currently paying an average of about between 5 to 7% depending on the different asset managers. They pay interest on it, they pay dividend. So you can take your outflow from those Euro bonds, which is in foreign currency, to match it with your expenses. Another one will also be, how can I actually tap into the global market to actually earn, even though I'm sitting down in Nigeria, how can I actually earn in those global markets? So it could be, maybe you have an ebook, you have a digital product, so you have something that is generating your money in foreign currency. So the truth is, in theory, it might look like, oh, this sounds like a whole lot of math or like a whole lot of calculation, but once you actually put pen and paper to it and you actually start practicing, it's not actually as hard as people make it out to be. So if you look at some of the global stocks, they actually give out their timetable in advance. So you know that in January, it's this certain companies that actually pay their dividend in January, just the way we know the financial banks in Nigeria. I mean, GTB paid yesterday, UBA will pay tomorrow, and Zenith is paying today. We know in this time of the year, that's when they will pay their interim dividend. The same way this global shares also have like a calendar which sort of guides you, so you'll be able to match those inflow with your expenses. So in summary, how can I invest in Eurobonds? Eurobond pays dividend or interest that you can actually match. How can I invest in global shares? So I'm using my dividend flow and actually match. Another way would also be, how can I earn in foreign currency, although I'm sitting in Lagos, in Kaduna, or in Calabar? So you're thinking about ebooks, you're thinking about selling your knowledge or any other thing in those manners. So basically, those are some of the ways we can actually achieve that.
Fantastic. Thank you so much for sharing that. And I think that earning in the same currency as your expenses is a natural way to just hedge, against, FX fluctuations that may impact you negatively. So thank you for sharing all of that with us. Now we're going into a poll. I understand that we're ready. So do you want to take it away from here? We have a question already, but before we take the questions, if we're ready for the poll, please let's bring it up. And also for the people that are listening to us, please, if you have any question, just drop it in the Q&A box. We definitely will get to it in the course of this panel session. So over to you, our host, to put up the poll. All right, can you see the poll now? Please, let's go ahead and fill in very quickly. Number one there says invested outside Nigeria, and number two says, has the devaluation of the Naira affected your investment portfolio or investment pattern? If we're done, I guess we can also have the results of the poll. So while we're waiting for that, there's a question. Okay, somebody was asking, what is the name of the app Mr. Asuquo mentioned? I think he said Bamboo. Yeah, that's it. I'm correct, right, Honorable? You mentioned Bamboo. Okay, fantastic.
Yes, I did.
So, all right. So that's the answer to that question. Thank you very much. If you have any other question, please drop it in the Q&A box and we will take it as we go on. All right. Okay, so we have the poll results. To the question, have you ever invested outside Nigeria? 21% of the participants said yes, and 79% said no. And then to the second question, has the devaluation of the Naira affected your investment portfolio or investment pattern? 64% said yes, and 36% said no. Obviously, we can see that the second question is almost like, I don't know, if the devaluation of the Naira has not quite affected your portfolio, then I'm wondering whether those of us that have not invested in Nigeria are also investing in foreign currency denominated investments in Nigeria. I don't know, but I mean, 64% is saying that they're not feeling the impact of the devaluation of Naira. I wonder what they're investing in actually. And also, we have 79% who have not invested in Nigeria. So obviously, that tells me that quite a number of people may not actually be, very much aware about how to take advantage of opportunities in the global market. Okpe, would you like to share with me those opportunities that you're aware about, that you think that people should sort of start to look at and explore and see, if there are ways by which they can actually diversify their portfolio? And of course, maybe the process by which they can access such investments.
Okay, so because investment advice requires me to be we don't give broad advice generally. It has to be tailored per client, right?
Okay.
So I will try and be as general without providing advice per se.
In that sense,
yeah.
Everyone is supposed to be careful about that and just not do copy and paste.
Yeah, in the context of the job. So this is what I tell people. When you start to invest, you look at certain things. Easiest thing to invest in any society, in any economy, is a mutual fund. Why? Because a mutual fund is what? A cooperative. A managed cooperative. That's what it is, literally. I say use cooperative, or I'll use the Yoruba, they'll say ajo, yes, so that people can understand easily, where people collate money together and use it for a collective purpose. Why do I say a mutual fund? Why? I tell people, simple example. If you had 100,000 naira, right, and you went to the bank today and you asked for a rate, they will give you what rate? Maybe 0 something %. But because like a cooperative, a mutual fund is aggregating money together. So if the mutual fund is going to the bank to place that same money, it's probably going with 1 billion naira. Now that 1 billion naira might end that mutual fund a 4 or 5%, which means that your 100,000 naira is now earning 4%, as opposed to if you had gone with your 100,000 naira by yourself. So we tell entry-level investors, I did it. When I started investing, it was the best advice I ever got when I started working. It was do mutual funds. Do mutual funds that you understand. Whether you're doing dollar mutual funds, even if you are going to invest abroad, start with a fixed income, easy, plain mutual fund. Why? Because there are a lot of structured products. They will turn everything upside down. And also, I need to, if I'm speaking to Nigerians in Nigeria, every country has the rules that guide that country. You need to understand the rules that guide that country. One of the key things you look out for is taxation. How does it impact you? So you want to buy real estate in England. Somebody was a real estate seller in the UK was telling me about how they arrested someone, one of her customers, because the person for tax evasion, not avoidance. Tax evasion. Yes, person evaded tax, right? Why? Because the person bought an asset in a particular amount in a particular way. Because the person wasn't advised properly according to the tax laws of the UK. So by the time they were reviewing, they were like, oh, this person is trying to, you understand, trying to use color to stop paying tax. And they take those things so seriously. So an innocent person got the wrong advice. So what I tell people is the very first thing the safest thing to do in any economy that you are going to is a mutual fund. Now, like the Honorable had said, like Tosin had also said, research that mutual fund well, research that mutual fund company. I usually tell people that the more, I would have said the bigger, but we've had the Enrons of this world, and recently we had Wirecard. So bigger does not necessarily mean better corporate governance, right? So when we say do your research into the company, understand what the company you're investing in and understand the asset you're investing in. So start with a mutual fund. That is the safest way to go, right? That is usually heavily regulated. Now, mutual funds cover equity, fixed income, commodities, in fact, all the asset classes. So in whichever way you want to go, the mutual fund gives you an opportunity. You can build a portfolio of mutual funds and diversify across asset classes. And do equity mutual fund in America, and do equity mutual fund in the UK, and then go and do fixed income do fixed income in Canada. A lot of people are going to Canada now. You understand all of that? That's one. Secondly, there's something I call them real estate investment trusts. So if you're a real estate person, Nigerians like their real estate. That's the only reason I'm mentioning this. Africans like real estate, not even just Nigerians. So one of the things that we do is the real estate investment trust or the real estate operating companies. Why? Because the real estate investment trust and the operating companies, the bigger ones across the world, give you the opportunity to be exposed to different types of real estate. They kind of operate, so the real estate investment trust kind of operates like a mutual fund on real estate. Right? So you are buying, so they buy the different types of real estate. They buy office space, they buy homes. If they're really big, they buy across the world. So they're exposed in America, they're exposed in the UK. When the UK was having all the Brexit stories and their property assets have gone in and bought some assets in the UK at that time. They buy some, they sell some, they manage some, right? So you are still exposed to real estate without dropping the amount of money it really takes, because real estate is capital intensive in itself as an asset, without actually putting that volume of in. I will now the profession that I am in, especially in banking. I'm not going to go and start. I can't tell you go to the real estate company. Search. Look at the top 10 investment trusts. Look at their entry levels. Look for the ones that are retail skewed if you're starting at the bottom. Look at the larger volumes if you're starting to the middle towards the top. And and then go in there, ask for a meeting, ask questions, read their FAQs. So I've given you for real estate and I've given you for assets. I will leave it at that because the others are a bit, if we start going into GDLs and ETFs, those are a bit more complicated. But mutual funds, you can have any type of mutual fund. And real estate operating companies or investment trusts, you can do that and you can use that to expose yourself across the world according to the different investments. Tosin had already mentioned Euro bonds and some other things. So this is just to add on to some of the things that I had already mentioned. I hope I was able to do that.
Thank you. Fabulous. That was so exhaustive. Thank you. Tosin, I'll come back to you very quickly. So imagine that I'm already an investor and I have my portfolio diversified into different asset classes. My question to you again, speaking to someone like me, is how can I maximize the value of my investments? Let's say I have real estate in my portfolio, I have fixed income, I have even private equity, and all of that mixed together. How do you think I can actually maximize the value of my investment, whether I'm exposed to Forex or not?
That's a very good question. I'm very happy that you asked. Now, the biggest thing about investing is once you've started out fighting the habits, which is like very, very big, and we've started investing, the next thing everybody should start thinking about is investment. So when I'm talking about, right, is my portfolio distributed in my best interest? So how do you look at that? It depends on a lot of metrics. So what a 55-year-old from retirement will look at So for the purpose of this conversation, I will focus on a particular category. So I'm imagining this person is 30. They're in a household that have double income and they only have just one child that is under the age of 5. So both parties are relatively young, right? They have at least another 30 years till they retire. They have a child, right? So in terms of risk, how much risk can we take? Should we be diversifying into real estate? time to catch up, as opposed to the person that is in their 50s with less time as they're closer to their retirement. So in order to summarize, what will I do? Look at my risk profile. Risk profile is very, very critical. I'm also looking at things like age. I'm also looking at things like responsibility. So how much cash, like real estate, it ties down your capital, right? I mean, that is if you're not renting it out, but it ties down your capital. A lot of people get more appreciation whenever they dispose that asset, as opposed to things that are more liquid and are more cash flow in nature. So I'm looking at all these different elements. I know it might sound like a lot of things, especially for our viewers watching, but trust me, guys, it's not rocket science. You know, once you start hitting it, then you start taking it off the tap. I don't want you to think, oh, you know, we're talking about capital appreciation. Oh, we're talking about liquidating asset. It's not as hard as it sounds. They're just setting rules you have to follow, and it will be perfectly okay. So yeah, so in summary, Abiola, it depends on my age, my risk profile, how much risk I'm willing to take, and also how much cash flow I require.
Thank you so much, because again, we can talk a lot about how to get people started on the investment journey, but even when you then start, how do you optimize your portfolio and get the most value out of it at the end of the day? Because again, you want the value at the end when you're ready to realize your investment, or maybe pass it on to the next generation, to be a lot more than now when you're putting it in and all of that. So that's really some key consideration that I'm sure a lot of the investing public will be interested in. So I'm going to you, Honorable. I hope you're here with us. Yes, you are. Okay, fantastic. So you have started to talk to us about some of the opportunities that are available in Nigeria, especially in the developing states. You had, spoken about cross-river states, given the fact that agriculture is a big one for you. And in fact, you already have some investors who are already looking in that direction. And that may be something that, anybody that is on this session, may be looking at as well. What other areas in Nigeria, for instance, do you think that investment opportunities are open that people potentially may not be aware of or are not taking advantage of? What are those investment opportunities that you think people should start to pay attention to, especially if you're looking to invest in Nigeria? Honorable, are you there?
Hi, how are you doing?
Okay,
yes,
good.
I am. Yes, I am.
Awesome.
Okay, so the first thing is, before we get to Nigeria, the first thing you have to ask yourself is what are the unique features that make a country an investment destination? What are those things that they look out for? It's usually the people, the environment, the legal framework and infrastructure. Obviously, there's what are the natural resources available in that country? What are the markets like? What are the taxation issues like one of our speakers spoke about? Efficiency and technology as well are very important. So where are we and where do we stand in Nigeria when it comes to ranking on some of these things? We do have wonderful people, that's the truth. We have a labor force, we have a skilled labor
very resourceful.
Very resourceful. In fact, we may be so resourceful that in the lack of legitimate opportunities, that resourcefulness gets turned for evil rather than for
absolutely
good. But that is an onus that is on the public sector, government, and trying to create policies that provide more opportunities for our teeming youth and those who are well educated. So, well, back to what we're saying. There are various things, but let me tell you the 8 extremely important features investors look at when looking at a country, and they are equally weighted. They look at corruption. They look at what is your corruption index. They look at dynamism. They look at economic stability. They look at the favorable tax environment, the technological expertise, the level of skill of the labor force, entrepreneurial activity in the country, as well as the innovation. It will interest you to know that some people may think, what is the best country to invest in? And some people may reel out countries like the United States or China maybe, or the UAE. But on the World Bank ranking that was taken earlier on this year, looking at data from 2019. The number one country to invest in currently in the world is Croatia. Croatia, the number one spot on the list of best countries to invest in, and this because and last year alone, the European countries saw a foreign direct investment of more than $389 million in the first quarter of 2019. Investors see it as economically stable and innovative, and they have a lot of optimism. So you have to create a lot of, you have to give you have to give confidence to the investors for that money to come in, because it's not free money. They want to put it in and they want to get it out at a significant return. But what I say to people is that investment is a trade-off between risk and return, yes. So the higher the risk, the more the return. You obviously don't want to enter a one-chance kind of scenario or a scam, but money usually flows towards the last frontier. And Africa is one of the last frontiers out there, to be honest. There's a lot of opportunities in Nigeria, but there's a lot of domestication, a lot of information. You need to actually understudy the country, and you can make a lot of money out of it. But if you don't, you can lose a lot of money. In the areas where one should typically go into in terms of investment, I'm talking from public sector, macroeconomic level now. So it's huge investments. I would say agriculture, mechanized agriculture. None of this getting a farm and getting people to till the farm. No, you get a farm, you get land, you get the right people, you get the right products, you get the right equipment, and do mechanized agriculture. Now, Nigeria has to go beyond just growing things or taking things out of the soil and just exporting it without adding value. So the next level now is agro-processing. We need to take this and there's a lot that can be achieved from there. So I would like us to come home, well, home for me, which is Cross River State. I started off, cocoa is one of those things that is endemic to Cross River, because Cross River is Nigeria's second largest cocoa. It also has the additional advantage of bordering Cameroon, which has an annual crop of 180,000 tons. So what did we do? We decided to invest in a cocoa mill, a state-of-the-art cocoa mill, working with Abiola, the Swiss equipment manufacturer. So those are things along the value chain that people can invest in. So we've invested in the milling to produce the cake, but people can come in, for instance, and invest in adding a chocolate line, a chocolate production line. So you take, who are known globally for producing the best chocolate? Switzerland. But Switzerland doesn't produce a single or cultivate a single seed of cocoa. They get all that from West Africa, from the Ivory Coast, from Nigeria, Ghana. So, and that is what the value is, just cultivating things and bringing them out of the soil, or even crude, just mining crude, or extracting crude from the ground and selling it. That's not where and that's where we should be looking at. We should be looking at areas where we have these natural resources in abundance, from crude to arable land. We need to be looking at the area where we add value. So anyone coming in trying to do strategic investment should find out what mineral resource or what crop is readily available, what has a huge market, and go not just from the adding. And that's the way to go, in my own opinion. And that's what we try and encourage investors to do, especially in Cross River State. So we've set up rice mills, we've set up cocoa mills, we're doing a lot in the agricultural sector, but mostly in agro-processing and leveraging on technology.
Thank you so much. Thank you so much. We have a lot of questions, and I'm just going to get right into it. The first question I'm going to be taking, I will direct quickly to you, Honorable, because it's closely tied to what you just covered. It says, what suggested opportunities are there in Nigeria to invest in aside from agriculture? So you've spoken extensively, right, about agriculture, the value chain, in agriculture, agro-processing, adding value to our produce and stuff like that. This person is asking, what are the other suggested opportunities
All right. Well, like I said, I'm not the minister for Nigeria. I'm the commissioner for finance. I'll always bring it home. My first mandate or responsibility is to try
it's Cross River, right?
Yeah. So, okay. So just from the top of my head, oil palm milling. One of the biggest producers of palm oil now globally is they got their seed, the finest specimen. So they took seedlings from Cross River State, they took it to Malaysia, planted, and now they're the world supplier. There's a lot of opportunity. Oh wait, sorry, you said outside agriculture, right? Okay.
Outside agriculture.
Okay, outside. Sorry, I don't know. I've been love agriculture, but okay,
I know you love agriculture so much.
No, because look, I'm going to deviate a little bit from the question, but if we are a country of 200 million people. If we could feed ourselves, you don't understand that of wealth generation there is, of feeding just Nigeria without importing. So, but mining, once again, coming home, domesticating into Cross River State. Cross River is rich in minerals. Worthy of note are limestone, barite, salt, clay, etc. Exploration of these minerals are very worthwhile investments. They have huge margins, and I mean, it's very capital intensive, very technological. I mean, you need to have the expertise source. So I don't know whom I'm speaking with. I don't know who asked the question, because it's a very ambiguous question. You know, when someone says what to invest in, yeah, it depends on what is in your what resources do you have at your disposal. So I like to talk like I'm talking to someone that has all the resources at their disposal. And so I will tell you, solid minerals is one huge area. It pays for itself. You don't need to market. You never see someone that is mining a solid mineral, marketing or advertising its product. It sells itself. People will find, you know, it has an inelastic demand. So if you have the resources, you have to get the equipment, go into solid minerals.
Thank you so much. All right, the next question is, with the new policies coming up in the Nigerian economy, an increase in different prices, what advice will you give someone that wants to invest in Nigeria? Should there be cause for alarm because of the changing economy? I would allow Tosin to take this.
Okay, that's a very good question. I love that you're asking that question. So we have a lot of people in diaspora coming to us and asking us, Tosin, I want to invest in Nigeria. What are your thoughts? And I'm going to be very honest with you, right? I'm going to be very, very honest with you. I knew that a report, Bloomberg did a report, I think about 3 months ago or so. Guinness was unable to take out a lot of their income that they wanted to move across board. And then also you're seeing a lot of investors struggling to liquidate their assets and actually move. And also with the embargo that is being placed on the currency, right? The foreign currency, it's a big problem. Now, how does the Nigerian government generate foreign currency? They generate it primarily from 3 different ways. The main and the biggest way that the government does that is via the sale of crude oil, right? It's about 90% or so of the government's income that is for that particular sale. Right, it's very, very big. Another way we can generate or bring in foreign currencies via FDI. So whenever foreign investment, not just FDI, so it could be FDI or FPI. So whenever they bring in their money into Nigeria. So you're also thinking, if these big asset managers are bringing their money to Nigeria, I'm talking about your Carlyle, your big BlackRock, your big guys, right? So they're not stupid if they're bringing their money, but then you should be asking yourself, what happens if they want to leave? Who will they prioritize? Whenever they lay that embargo on, you can't move money yet. Is it going to be you with your $20,000 or your $10,000? Or is it going to be the bigger boys with like $3 million or even like $50 million that they're trying to move? So now let's bring it back home. What should I do?
The financials. What I mean, I look at the financials when they do their statement of annual. So you are investing in a mutual fund that is managed by a particular company. They do they print their financials. You don't look at it. Right? So you don't know how much is going into operating that mutual fund, which invariably affects to a certain extent your average return. Right? But a mutual fund, depending on how you go in. So if you are a major player and you can take your money straight to the bank. You can take ₦1 billion straight to the bank, right? You and the mutual fund are on the same level, because the mutual fund is probably taking the volumes you are taking to the bank. But if you are at the lower level, the mutual fund will always, I can assure you, give you a higher return.
Thank you so much, Ekpe. Thank you. The other question we have here is, what should someone look out for in a real estate fund and mutual fund?
So I keep telling people, for me, the number one thing that I look for, as I said, after Enron, Wirecard, and Wirecard was the most recent one that, there was the whole scam in Germany around the auditing, and I think it was about 3.5 billion euros did not exist, right? Corporate governance is the very first thing you look for.
Very important.
In any company you are investing in. What is their corporate governance like, right? So you see that page that talks about the board and the people that sit on the board, right? That's a
very important.
Because the quality of the people that sit on that board determine to a very, and who is auditing that book. And that's a bit controversial, because the people come to you with stories like EY had its own with Wirecard, and PwC has had its own, also Anderson with, so they've all had small stories and standouts here and there, but they are still better than having sometimes Kemi and Co, because sometimes, pardon me if your name is Kemi, but you understand, we
understand.
What you have to lose is less. So the very first thing you look for is look at the corporate governance. Who is sitting on the board of that company? How many years have they been working? Who manages the asset portfolio? All those things matter, which is why I will go back to what I have heard everybody say in this meeting, either directly or indirectly. You need to do your research. Nobody can do that for you.
Thank you so much. Thank you so much. We have the second poll coming up now. As we wrap this session today, the second poll is going to come up. I know we still have a few questions. I don't know if we're able to take all of them, but the second poll is coming up now, and then we see how much time we have left, if we're still able to take any more questions. So the poll is up. Would like for you to quickly fill in the questions. Number 1 says, have you considered investing abroad to gain a second nationality? Number 2 says, have you ever been refused entry or visa to a particular country? And number 3 says, would you consider a professional service company for your visa application? I guess we can do that within the next 1 minute. So while people are responding to the poll and the results are being collated, I'd like to get your thoughts, Ekpe, from your experience. Is it possible for the Naira to be revalued? This person is saying it will keep devaluating. What's your take on storing foreign currency?
We've had a very long conversation. Tosin kept saying, diversify. If diversification is the secret of every, let me not say diversification, balance is the secret of every portfolio. So creating balance is what you are looking for. Balance across currency, balance across asset classes, balance across even things like beneficiaries. You get me, right? As in who gets what. If you have a life insurance policy, who is your beneficiary, your school fees fund, so balance is what you're looking for. But balance is also subject to your perception of life, where you are going and what you want to do. So that question is it's a question that, as somebody that helps to build portfolios, you would actually have to have a conversation with that person, because you need to understand where exactly
where the person is coming from.
Exactly.
Absolutely.
Where they're going. Then you can now say, do you know what? How much you want to keep in foreign currency versus how much you want to keep in naira? Are your parents here? Are they abroad? You know, all the different questions now come into play. But what you are looking for, most importantly, balance.
Okay.
Just balance.
Fantastic. Do we have the response to the poll now? Do we have the poll results? Awesome. Okay, so for the number one question, have you considered investing abroad to gain a second nationality? 53% says yes, 47% says no. Number two, have you ever been refused entry or visa to a particular country? 27% says yes, 73% says no. And number three, would you consider a professional service company for your visa application? 73% says yes, 27% says no. So I believe that Filii Magna would use this information in a way to produce more, or at least to give you feedback on how this impact the work that they do as an international travel agency that help people sort out their visas and stuff like that. I want to believe that they will have more conversation on this as we wrap up this session. So, I mean, we're closing this panel, and it's been such, you know, a very robust conversation here with different perspectives, public sector, private sector, personal, corporate views, and all of that all coming together. I want to believe, as much as I've had so much fun here, I believe you also were enriched by the body of knowledge that was being shared on this panel today. I would like to give us an opportunity to just share one last word as we wrap it up today. So I start with you, Honorable Asuquo Ekpeyong. Are you there with us? Can we have your last word on this panel, this session? What are your parting words? You're on mute, actually.
Okay, yeah, so you asked?
Okay, so I was asking that as we wrap up the panel discussion, we would like your final words, you know, as we tidy things up and bring it to a close.
Okay, yeah. Well, investment is good, obviously. That's why we're having a conversation about it. It's a veritable tool to ensure that your 1 naira today turns into even more tomorrow. People take for granted the fact that they lose a lot of money just putting money in a bank account, because as the economy is moving on, the real return on your money in your account is falling when you compare or juxtapose it with the inflation rate. So it's important to invest. But what is very important, or even more important, is for you to gather as much information as to what you're getting into before you move. It is the most important thing. I can't stress it enough. Information is the basis for every decision. So gather what you have.
Thank you so much. We're so honored to have you on this panel. Thank you so much.
Thank you.
And Ope, over to you.
Okay, so for me, it's really simple. Tosi said something. It's not as complicated. Get advice when you don't understand what you're going into. Talk to people that know. Do your own research. You cannot give out important things about your life to somebody else. So do your own research. I know sometimes it's hard, especially if you're not math skewed, but let me tell you a secret. Everything about money is principal times rate times time.
That goes back to primary school, right?
Primary school, there is always some element of principal times rate times time somewhere in there, if you think about it. So once they can break it down to that for you, then it makes it easy for you to understand. Don't forget that taxes are different in each country, and always remember to balance. And like Honorable mentioned, hedge. There are many ways to hedge. Remember to hedge. Thank you very much. I'm very honored to have had the opportunity to share today.
Thank you so much, Ope. You did so fabulously, and we are honored to have you and share from your wealth of experience and knowledge as well. So thank you for having me as well. It's been a pleasure and an honor, hosting the panel and moderating the session. I enjoyed it. I also learned as much as possible, as well as everybody here. So it's my pleasure, to have done this. Filii Magna, over to you now. You can take it away.
Thank you so much, everyone. It's been an honor listening from here. I'm in a different time zone, but I've been listening very, very actively. I literally be going through the different attendees list. I know we've had some of our clients that joined. We've had several people that have joined, and I can tell you from the comments that I've got from the back end, a lot of people have had a lot of questions answered. And I want to say thank you specifically to the moderator, Abiola, that has done an amazing job moderating this panel. I feel like in the short time, 1 hour, and I know there were a lot of questions that weren't answered, but in the short time, she actually answered so many questions. She's done an amazing job. Thank you so much, Abiola, for moderating this panel. I feel like I will be coming to take more knowledge from Ekpeyong as well. I know every single person here, from working with them or from relating with them at different points, even Honorable and also Tosin as well. It's truly an honor to have you here. And now I'm going to bring the panel to a close. And just to say, on behalf of the team, I'm truly honored. On behalf of the board, the team members, and the partners at Filii Magna, it's been such an honor opening this live series, Globalization series. There are going to be a few other conversations in the next few days. And just to reiterate, Filii Magna is a niche professional services travel consulting company. We handle travel documentations for corporates and private individuals, expatriates, whether you're bringing people in and out of Nigeria. For the last 4 years, we've specifically been in Nigeria, and now we've opened new business in the UK. I'm currently sitting in the North American office, and it's such an honor to be able to walk across the board with the different teams as well. If you need more information, you can check the website. You can also check our social media handles as well. We're very proud of our work here, and it's such an honor to be able to relate with the different people. If you need more information about the different panels that are coming up, please check the website. Just use /Globalization series, and you should be able to get more information about the other panels as well. Thank you so much. And on behalf of the management and the team and the partners at Filii Magna, thank you to all our panelists. This will be the end for me. Thank you. Good morning. For me, it's good morning. For you, it's good afternoon.
Bye. Have a lovely rest of the day. It was a pleasure.
Bye.
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 Pleasure. Bye.